Hi friends, welcome to the rapid revision Chalisa of RBWM. Now as we are starting with Chalisa, you know Chalisa is related with whom? So we'll start with by taking the name of Hanumanji. Okay? Om Manojavam Marutulya Vegam Jitendriyam Buddhimata Varishtham Vatatmajam Vanaryuth Mukyam Sri Ram Dutta Sharanam Prapadde. As we are starting the Chalisa should be named in the name of Hanumanji. So let's start. Today is the revision. Sure, I'll be covering mainly theory only. Means majorly theory only, because the numericals, objective questions that I've covered it in this marathons, right? So let's start with chapter number 1, characteristics of retail banking. Here, the definition of retail banking, as discussed above, bring out the following characteristics. So, retail banking means what? Banking facilities targeted at individual customers, right? Focused towards the mass market segment covering large population, right? Mass market, individual customers, okay? Offer different liability, asset, and plethora of services to the individual customers, right? Different liability and assets and plethora of services. What do you mean by liability asset? You know, liability asset means basically your loans, deposits, okay? And plethora of services means this is other, third party. We are selling third party products also. So this is a basic characteristic of retail banking. What are the advantages? So this advantages of retail banking are client base is large, firstly, right? Large client base. Therefore, risk is spread across the customer base. So, large client base. Got it? Second, customer loyalty will be strong. Loyalty. See, have you seen any customer going from this bank to that bank because 0.25% interest is here and there? Nobody. Once a customer is in the bank, generally the retail customer stays for lifelong. Okay, so loyalty is strong and customers tend not to change the bank very often. So, this is the advantage. Attractive interest spreads, right? Interest spread means what? What is the spread? NII. NII means what? Net interest income means what? NII means basically the interest on the loans minus interest on the deposits. Okay, so that is huge as compared to the corporate banking, isn't it? Next, constraints of retail banking. What are the disadvantages or problems? Large number of customers, right? Large number of clients. This is the main problem. IT systems are not sufficiently robust. There are so many cases. You always hear the cases of that hacking, this hacking, money gone, right? Rapid evaluation of products means products are changing daily, very fast changes, right? Prerequisites of success of retail banking. So what is the prerequisite? Prerequisite means what should be done so that the retail banking succeeds. Presence of efficient delivery mechanism. What is delivery mechanism? Delivery mechanism means you must be able to reach to the clients as per their requirement, right? That's why we have all these alternate channels, physical channels, phone banking, mobile banking, app banking, social media banking, doorstep banking, thousand things we have. Product appropriateness. Appropriateness means what? What is required by the client, we must provide that only. Pricing, right pricing. Pricing means I must give the same rate of interest which is going on in the market. If market is going on with 8% and I'm going 12%, nobody is going to buy my product, isn't it? Scoring models. This is very essential for fastness, stats. CIBIL. Scoring model means CIBIL basically. Because of the scoring models, we are able to deliver the loans very fast. Consumer protection environment. This is a new, not a new now, almost it is 25-30 years now in banking. So the point over here is consumer protection. Means now even if a slight disadvantage is given to the client can go to the consumer forum immediately. So this is the environment, and you have to always focus on this consumer protection. What are the challenges in retail banking? Challenges are basically, see the challenges, consumer protection and pricing, right? Consumer protection is an important part in retail banking. Inadequacy of MIS, right? MIS is mainly inadequate. Why? Because the client base is daily changing. You create an MIS today and tomorrow it changes. Understanding the KYC AML issues, because why KYC AML issues are difficult? Because the problem over here is, if you grow in technology in a good sense, always the cheater or the fraudster will be one step ahead. Whatever you do, the fraudster will be one step ahead. So you prepare 1,000 checks, fraudster will always try to defraud you. Okay? Managing the risk, right? Managing the risk means here KYC AML issues, risk. What are the various risks in banking? Various risks are there. It is related to KYC AML also. It is related to NPS also. So that is also an important part. But retail banking is good segment because NPS are lesser. Reasons for growth of retail banking segment. Rise of young Indian professional population is growing, and young Indian professionals are going. India is the only country with less than 35 years as the average age. Economic superpower, we are growing. Increasing purchasing power of the middle class, isn't it? Financial market reforms and engine for economic growth. We are the only growing economy at 6.57% now. So that's why we are the growing engine. What is the future of retail banking? Future of retail banking is growth in the digital banking, rapid. Okay. Rapid growth in the digital banking, right? Second, rapid adoption of blockchain by retail bankers. Blockchain is nowadays there in the banking. What is blockchain? See here, blockchain is a newest technology. It works on BBAA system. Okay, block, broadcast, then authorize and add. Okay, so it is one of the best technologies. AI, artificial intelligence. We'll study this whenever we come to that topic. Okay, data science, cyber security is a top priority. See this, all these are the futures. Payment innovation, fast payment methods, role of big tech in banking industry. Big tech means technology companies. Okay, so that was about chapter number 1. Now role within the bank, unit 2. Okay, what is it? Role within the retail banking or within the banking system. So what is it? Let's see. The main approaches are as follows. SBU, Strategic Business Unit. Now this question will definitely be there in the exam. SBU are autonomous divisions, small enough to be flexible, large enough to exercise the control over most of the factors affecting its long-term performance. Means SBU is like the profit center. You manage your own expenses. Means it's like the house. In our house, what do we have? Each house, like your family, my family, everyone's family. We manage our expenses from where? From our income, isn't it? So same logic is there for SBU. Your branch has to manage the expenses from your income only. Nobody else is going to support you. That's the SBU approach. Here important terms comes with MBO, management by objective. Every SBU works on the term called as MBO, management by objective. Here in MBO what happens? The objective is first decided. That this year's profit of mine should be 20% more. Accordingly, the whole profit is divided and the target is divided to the staff. Okay, so that is SBU approach. Second is departmental approach. Now this is mainly followed in our nationalized banks. Now this SBU approach is followed in foreign banks mainly. Okay, and new private banks. New private banks means HDFC, ICICI, IndusInd. All these follow SBU approach. Foreign banks means all this, Citibank, this HSBC, all these. Okay. Departmental approach. Departmental approach means in here, this is mainly followed in our public sector banks and old age private banks. Rather than dividing on strategic business line or business line, organization can be divided on the basis of the functions. Clearing division, okay? Clearing, cash, we have clearing department, account opening department, so that's departmental. Integrated approach. This is followed in small companies, or you can call it smaller banks. Okay. What does it do? In integrated approach, single person does many jobs. You see in your branches also. Nowadays, many of your branches are also following integrated approach. Why? You see in your branches, the staff is always lesser. Means single person does the job of clearing also. In many branches, rural branches mainly, single person does the job of cash also, clearing also, transfer also, everything, isn't it? So that's integrated approach, but mainly it is followed in smaller businesses. Okay, smaller banks it is mainly followed. Then retail versus corporate, next chapter, third chapter. I'm covering all the important points. Otherwise you'll say, sir, chapter is big. What? You don't have to study the full chapter. What is required in the exam is to be studied, isn't it? Retail versus corporate. Okay. Now in retail versus corporate, retail banking sector is characterized by three basic characteristics: multiple products, multiple channels, and multiple customer groups. Now what do you mean by this? Multiple products mean various products you are having, like saving current FD, liabilities, deposits, loans you have, housing, personal, credit card, consumer, thousand types of loans. And third party products you give, insurance, mutual fund, plus others also, right? So basically these are multiple products. Channels means multiple channels. What do you mean by this? It means that you'll be reaching to the customer through branch, DSA, right? Physical channels. BCs, business correspondent. And through alternate channels, through what? Through various this online banking, internet banking, app banking, ATMs, phone banking, right? Call centers, social media, everything. Multiple customer groups. Customer groups are of various types for you, right? You'll be having 70 plus customer also. You'll be having one 10-year customer also, right? Everything. You'll be having the big corporates also, but that is not there in retail. But let's say SMEs also, MSMEs, because they are there in retail. You'll be having the shopkeeper also, right? You'll be having the HNI client also, multiple clients, right? Next, now the models. Business process structure in retail banking, horizontally organized. Here there are four models. Horizontally organized, it is a modular structure using different processes models for different products, offering end-to-end solutions product-wise. Remember this word product-wise. Means the data is shared within the product itself. Home loan data is shared with home loan. Personal loan is shared with personal loan. Home loan data is not shared with personal loan. That is horizontally organized. Vertically organized. This is the best model. Here it's a centralized database, provides functionality across the products with customer database orientation, and centralized customer database is used across products, right? Centralized customer database. So here it's a common database. Home loan data can be used by this home personal loan also, right? It can be used by everyone, right? So that is the point. Next is predominantly horizontally organized model. Now this is like that. Horizontally is 0% data sharing, vertically is 100% data sharing among various products. Predominantly means 30% data sharing, is mostly product oriented with common customer information for some products. For some 30%, थोड़ा सा प्यार हुआ है, थोड़ा है बाकी, isn't it? In predominantly vertically organized model, this is major, right? So in predominantly vertically organized model, common information is available for most of the products, isn't it? Most of the products. Got it? Next. Business approach, domain specific. So first is segmented approach. Segmented means what? All the branches are classified based on the business potential. Okay, business potential. Got it? Then with regards to the retail space and business targeted in these segments of the branches only with the focused marketing strategies. So important part, two words over here are focused marketing strategies and business potential. Remember these two will be there in the exam. Geography based approach, where retail product models are built on the geographies, means South India branches, North India branches, right? Dubai branches, UAE branches, USA branches. Classification based approach means this is rural, semi-rural, urban, semi-urban, all this. Okay. So classification means rural, semi-urban, urban, metro, all these. Product models. What are the various product models in retail banking? Look at these product models. Firstly, what are the various products? Saving, current, FD, term deposit, core banking products. And other than that, we have third-party products, which are not the core banking products, right? So retail, what are the advantages of these products basically? Retail deposits are stable and constitute core deposit, right? Stable. Generally, these retail deposits never go out of the bank, not that much. Okay. They are less interest sensitive or interest insensitive. Means if the interest rate changes by 0.25 year or there, customer doesn't leave. Huh? Less bargaining. Customer doesn't bargain much. Retail customer. Okay, less bargaining. Important points over here. Low cost funds, saving current. CASA is the most low cost funds, right? Effective customer relationship management. You can speak to the customer more often in retail, right? There is a huge means customer is mainly attached to the bank. You see, people find pride. I'm having my account since 30 years in PNB. I'm having my account since 50 years. My grandfather was having the account with SBI. Now I am having. Now my son is having. Daughter is having this. They find pride in this. Okay. Retail asset products. So better yield. Retail asset means what? Your personal loan, home loan, credit cards, right? Two-wheeler loan, car loan, LAS, loan against securities. You name it, you have it. LAP, loan against property. So better yield, improved bottom line, good revenue. Consumer loans are presumed to be lower risk and NPA perception. So consumer loans are of lower risk. Why consumer loans lower risk? Because customers over there are afraid of not getting the loans further. Retail customer is always afraid. You yourself think about yourself only. Will you ever try to miss any EMI? We are afraid of that. So consumers are always afraid of this. Okay. Helps economic revival, helps in economic revival of the overall country, improves the lifestyle, right? TV loans, smart TV loans, nowadays we are having all these AC loans, right? Other products and services broadly cover the beyond product facilities tagged to the products and services, right? So other products and services broadly cover the beyond product facilities. Other products means which are not the banking products, okay? Means basically your third party or other than the retail assets. So product and services. Next, one set of products like credit cards, debit cards, ATM cards, telephone banking, mobile banking, internet banking. Okay, these are other products. Internet banking, depository. Depository means what? Depository and broking services. Okay, demat and broking. Demat is basically for your this share, keeping the shares, and broking services are for buying the shares. Here you can buy the shares using broking accounts. You can keep the shares in demat accounts. Okay. Distribution of third-party products like life and non-life insurance. Okay. Process models of products and services. There are three dimensions to it. The entire processing is done through in-house resources. Some products are processed in-house. So entire is done in-house. So this is mainly what? This is mainly for PSBs, public sector banks. Entire processing is done in-house. Okay, so this is over here for PSBs. Some products are in-house, some products are outsourced. This is new generation private sector banks. And third approach is outsourcing the entire thing. So that is foreign banks. Okay, so these are the three approaches. Kindly note. What? Completely in-house, public sector banks and old private banks. Some products in-house, some products outside, new generation private sector banks. And completely outsource, foreign banks. Okay. Pricing of the products and services. So Pricing depends on what is the market dynamics, what is the risk perception, return, regulatory advices, both covert and overt. Covert means what? Covert means hidden, and overt means which are open. Okay. This question comes in exam, covert and overt. So pricing of any product depends on this only. Market dynamics, what is going on in the market right now? What is the price going on in the market? Loan rates. Risk perception, what is the risk expected in that loan? Return, regulatory advices. Okay, regulatory advices means what does RBI say about it? What is the return expected? Okay, so that is pricing. Technology. Technology models in retail banking includes, these are in-house, outsource, partially in-house, partially outsourced. Just now what we saw. Okay. Distinction between retail and corporate banking or wholesale banking. What is the distinction? See this. It's like this. Corporate versus retail banking. Now this is a topic actually. Okay. In corporate we have small number of customers. In retail we have large number of customers. Right. Corporate we have narrow client base. Retail we have huge client base. Corporate we have large value transactions. Retail we have small value transactions. Right. Say this. Now it's better. Large value transactions in corporate, here small value. Large number of transactions in corporate. Here also, here in retail also you have large number of transactions. Number is big in both corporate as well as retail. Interbank transactions. So in corporate you have interbank transactions also. Large sum of money. Okay, large sum of money means huge amount is involved. Here smaller sum of money is involved. Interbank markets, right, means it is within bank to bank also. PNB buying funds from SBI, SBI buying from HDFC Bank, HDFC Bank buying from ICICI. Interbank markets. Funds to business undertaking. Now this is called as B2B and this is B2C, business to customer, consumer. Okay. Low cost of processing in corporate, high cost of processing in retail, because we have to open many branches in retail, isn't it? Corporate you don't need that many branches, isn't it? Next is branch profitability. Now see this, before that we'll study some banking. BR Act. Banking is classified under the BR Act 1949. Now what is banking? It is, you know this, getting the deposits and lending it to the customers. That's basically the job of banking. But this is defined in BR Act, Banking Regulation Act 1949. Section 5(1)(c) further defines bank as any company which transacts in the business of banking in India. Okay, business of banking. Got it? Got it? Section C of BR Act defines in detail the types of activities the banks are authorized to carry out. So section 6 defines what job the banking must do. Now what I mean by this, tomorrow a bank starts a retail shop selling the grains, not allowed. So it is defined in this BR Act. In terms of section 1A, section 1 of BR Act, no company other than banking company shall use the part or a name as bank, banking, etc. Right? You can't have, I can use my name, Vishal Mantri Banking. You can't use your name. You should be defined as a bank. Only then you will be acting as a bank. Otherwise, we are money lenders. Suppose if I take money from somebody and give it to somebody, I can act as a money lender. I'm acting. I have a separate license for that. Okay. Section 7(2) states, no firm, individual or group of individuals shall, for the purpose of carrying out any business, use as a part of his name any words other than bank, banking, etc. Right? You can't use it. History of retail banking. Now I'll just give you in short. Complete history is not needed right now. Okay. Phase 1 was between 1770 to 1969. Phase 2 was nationalization phase, 1969 to 1991. Phase 3 was post-liberalization phase. Okay. After 1991, and still it continues. Got it? So 3 phases. Kindly note this: 1770, 1969, 69 to 91, and 91 and above. RRB was established in 1975. Okay, and RRB Act is in 1976. Government decided to set up a committee under the leadership of Sri M. Narasimham to manage the various reforms in the Indian banking. That was in 1991. Narasimham committee came in 1991, first Narasimham committee. Okay. Now we come to this profitability part. Profit is an absolute number determined by amount of income above and beyond the cost or expenses an entity occurs, and profitability is a relative one. Now understand the term. This question comes in exam. Profitability is a relative concept. Profit is an absolute number. Very important term. This will be there in exam. Profit is an absolute number. Profitability is a relative concept. Okay. So what is there in profitability? Kindly, I'll explain you in single line. Suppose if I have a 1 lakh profit. I am doing a business. I have a 1 lakh profit. So should I say that I am profitable? If I am a small business person. Now if tomorrow Reliance also has, let's say, 1 lakh profit. Reliance company. It will say we had 1 lakh profit this year. Will you say Reliance is profitable? No, because what is the volume of Reliance? Huge. What is the volume of mine? Very small. Okay. So profit is an absolute number. Profitability is a relative one. Return on asset, ROA. Return on asset is determined by the amount of income that it earns on the net interest income. Okay, so ROA means what? Amount of income it earns on its NII. Right? See here, ROA includes, what is the difference between ROA and NII? It is basically income that it earns on its NII. In ROA we include, kindly understand, while calculating ROA, we include your third party products also. Whereas in NII, you don't include third party products. There you include only your interest income from loans versus deposits. Okay. So NII and fees on its services. See this. What did I say? ROA includes NII and fees. Both mean third party products. NII income depends partly on the interest rate spread, which is the average interest rate earned on its assets minus average interest rate paid on the liabilities. So NII means spread. Got it? So NII is related mainly to your products, banking products. ROA is related to NII plus third party products. Net interest margin shows how well the bank is earning income on its assets. NIM. What is the formula for NIM? NIM equals to NII upon average total assets. NII upon average total assets. That is NIM. What is net profit? Operating profit minus taxes and interest. Operating profit minus taxes and interest. What are assets? What is this balance sheet equation? Assets equals to liabilities plus capital. This is known as the balance sheet equation. Okay. Leverage ratio. What is the leverage ratio? Bank assets upon capital. Leverage. Okay. What is the ROE? ROE equals to ROA into leverage ratio. Kindly note this. ROA into leverage. This question will be there in exam. ROE equals to ROA into leverage ratio. Okay. Net income upon bank assets into bank assets upon capital. So ROE equals to net income upon bank capital. Got it? Strategies for improving efficiencies in banking operations. Means how do I increase my profitability? Business realignment means I must always think how can I increase my business as such? How can I reduce my cost? Channel optimization means how do I reach to the customers through various other channels, online, social media, physical, which is profitable. Process cost. Okay, what is the cost of the overall process, banking process? Staff productivity. What are the returns this staff is giving me? Technology. What is the level of technology I am at? Have I adopted the latest technology? Vendor management. What are my suppliers? Are my suppliers giving me better deals? Okay. Product bundling and relationship pricing. So what is product bundling? It means I must be able to cross-sell the products more to the customers. Means what? Cross data sharing, cross bank data sharing. It means what? Cross selling the products to various same customer. I am cross selling various products. So cross-selling and upselling, kindly note, upselling means it is selling the higher end products. Building a 360-degree customer view means looking at the customer from all the angles, not only one saving account. We must look at that customer from saving, current, loans, everything. We must try to sell as much as possible. Sophisticated customer segmentation. So sophisticated means which is purely related to our profits. What are the factors affecting profitability of banks? Macroeconomic factors, positive to GDP growth, negative to inflation growth. If my GDP grows, my bank will also grow. If my inflation grows, my bank will not grow. Okay. Now let's focus on module B. Customer requirement. Quantum of loans. Quantum of loan is either related to the product or to the income of the individual. The quantum is expressed as 12 times the monthly income. In case of personal loans, means loans for personal expenses, personal loan. So 12 times the monthly, 4 times for vehicle, 48 to 60 times for housing. Okay, now this depends, 48 to 60. The rule is like this, 36 times of gross income or 60 times of your net income. That is the rule. Margin may vary 15 to 30% of the value of the asset depending on the type of the loan scheme. Okay. Payment period. Payment period varies from 3 years to 30 years depending on the type of the loan. Personal expense within 3 years, personal loan. Auto loans 5 to 7 years. Housing loans 30 years. Right? You know this now. Maximum we can give up to 30 years housing loan. Generally banks give up to 20 years. You can give up to 30 years. Okay. What are the levels of the persons? Okay. They are 2 lakh to 10 lakh, mass market, 10 lakh to 50 lakh, mass affluent, 50 lakh to 400 lakh, super affluent, 400 to 4,000, high net worth, 4,000 to 1 lakh 20,000, super high net worth. Above 1 lakh 20,000, it is ultra high net worth. Okay. Then Maslow's hierarchy. This is also asked in exam. Every exam it will be there. This exam also it will be there. Maslow's hierarchy has 5 levels. Physiological needs, safety, social, esteem, and self-actualization. Okay. Physiological and safety are basic needs. Belonging and esteem, this psychological needs. And self-fulfillment needs is self-actualization. Okay. Here motivation decreases when needs are met. Which here motivation decreases, but here in actualization, the motivation of the person increases when the needs are met. Okay. If you have to sell any product, you have to see to it which target customer, what is the target customer. For Jandan accounts, it is physiological needs. For very high premium insurance or your high home loans, big home loans, you have to target these two persons, self-actualization and esteem. For the pension plans, generally you will target this actualization. Okay, because these are the senior persons. Okay. Customer requirement about the service quality. What does the customer require? The customer requires tangibles, reliability, responsiveness, assurance, and empathy. Okay, these are the elements which are required by the customer. Okay, tangible means the customer should be able to feel your service. Reliability means the customer should be feel reliable. If some job is given, you will do it. Responsiveness means you must respond to the customer very fast before the competition responds. Assurance, you must give an assurance that the work will be done. Empathy, empathy means you must understand, you should put yourself in the shoes of that customer. Okay. Let me expand this. Hold on. So what does the customer require from the bank? The customer requires right product mix. Okay, right product mix means product, price, place, promotion, people. Okay, that's 7 P's. What are the 7 P's? Product, price, place, promotion, people, physical evidence, and processes. Okay. Channel mix means both direct and indirect channels or e-channels. Okay. Structured process time. So TAT, fixed TAT. Delivery of promises. Whatever you promise, you must deliver. Okay. Satisfactory service experience. So the customer should feel satisfied whenever he does this. Gives you the chance to do the service. Okay. Now next chapter, product development process. This is another chapter in the module B. This Theodore Levitt, it always comes in exam. Product are almost always a combination of tangible and intangibles, right? Because that is the basic logic. What is a product? It is a combination after sales service and service, right? That is basically the product. What is the product life cycle? Introduction, growth, maturity, and decline. Okay. In introduction, what happens? You have to invest more. Okay, the profits are less. Growth, the investment becomes less and profits start increasing. Here profits are maximum, sales are maximum, investment is less. Here in decline, the sales go down. So that's why we either remove the product or we rejuvenate that product. Okay, that is PLC. What are the product lines? So products can be broadly classified as deposit or liability products. Lines means what? Firstly understand that. Lines means various segments in which you deal. So deposit and liability product, asset and retail credit product and other products. Okay, third party, okay, all these. Now what are the various types of products? See this, potential product. First is core product. Are you able to see this? I'll tell you because this is this much screen only. First is core product. Core means basic product. Then generic product. Generic. Then expected product. Expected. Then augmented product. Augmented. And then potential product. Okay. What is core product? The basic product. Generic means which has a general name. It is commonly used by the persons. Expected product. Expected means what are the additional features the product must have. What the people feel the product must have. Augmented product. What are the sales after sales service you are giving? What are the additional features you are giving? This is what customer wants. Augmented is what you are giving. And potential means what can be the future. Future means like blockchain technology. That is a potential product. AI. That is a potential product. Okay. Now about the retail products, liability products, BSBD accounts. Not to have the requirement of any minimum balance, right? No charge will be levied on non-operation, non-activation. Okay. So non-operation, inactive account, no charges. Holding of BSBD will not be eligible for opening any other savings account. That is important. If you have a BSBD account with the bank, you can't open any other account. Otherwise, what's the use then? What is BSBD for? Because you can't maintain the balance. If you are maintaining the balance, then what is the use? If the customer has any existing accounts in the bank, the same is required to be closed within 30 days from the opening the BSBD account. Okay. The aggregate of all the credits in the financial year does not exceed rupees 1 lakh. Important one. The aggregates of all withdrawals and transfers in a 1 month does not exceed rupees 10,000. Okay. The balance at any point of time does not exceed rupees 50,000. These are the basic conditions, okay, of this small accounts or BSBD accounts. KYC. The important details which are furnished in the KYC are, here there are two types of details. One is static, second is dynamic. Static means what? Name, address, family members. Okay, means which cannot change. Educational qualifications, age. Age means date of birth. You cannot change it. Occupation. Generally, occupation is also static. What is dynamic? Financials. Okay. What are the various cards you are holding? What are the various assets you are holding? Two-wheeler, four-wheeler. They keep on changing, isn't it? Nationality is a static. Okay. So these are the points in KYC. What are the retail credit products? Home loans, auto loans, personal loans, credit card receivables, other retail loans. Okay. What are other services? Is a non-fund based. Other means what? Non-fund based business of the banks. It can be LC, bank guarantee, insurance, mutual fund. In these types of services, bank will be guaranteeing on behalf of the customer to whom they will be offering these products. So this is guarantee we are talking of. So non-fund based, okay? It can be non-fund based or it can be TPP also. What is the non-fund based? So non-fund based business over here, it means your LC, letter of credit, letter of guarantee and co-acceptance of bills. These are the three main non-fund based products. Now this is the basic logic of this product development. First is idea screening. Idea generation is the first step. Then idea screening. Then concept testing. Then business and market analysis. And then product development and test marketing and commercialization. So this is the overall cycle. Afterwards again do the renew that product. Okay. So first is idea generation. Second is idea screening. Screening means what? Whether this idea will work or not. Concept testing, actually converting into the product. Then test marketing, business and market analysis. And then product development testing and commercialization. And then last one is idea generation. Again it goes to idea generation, new product development. Okay. So remember these steps. Product policy. This is given by the board of directors. It is signed by the board of directors. Okay. It involves the following concepts: appraisal of the product line and the individual product, decision of the product differentiation, product positioning, brand decisions, decisions on packing, and new product development. So the product policy should include all these 6 elements. Okay. Appraisal of product line and individual products, decision on product differentiation, product positioning. Positioning means this is called as brand positioning. Here, product positioning and brand positioning, it's one and the same roughly. Positioning in the minds of that customer. Now, brand positioning can be of two types. One is product and second is a company. Okay, means the complete SBI. SBI is a company and YONO is a product. Decisions on packaging, it should include that also. Packaging means in bank we don't have packaging. In bank, what do we have? Extra services. What all extra services we will be giving? And new product development. So everything should be included in this product policy. Okay. Now next chapter, credit scoring. The types of risks and triggers for risk are mentioned below. Credit risk, customer fails to pay. Business risk, losing money due to wrong strategy. Long-term strategy is wrong. Business. Nokia phones, right? Nokia phones were once a leader, now gone. Credit risk means customer does not pay. Market risk, change in the market prices. Operations risk, process failures and frauds. Okay, these are the various types of risks. What is the credit score? Credit score takes a snapshot of the consumer's credit report through advanced analytics and turns the information into a 3-digit number, right? So credit score will check what were your earlier loans, have you repaid them correctly, is there any default. All these things will be checked in the credit score. So a number will be generated. Minimum is 300, maximum is 900. So a credit score cannot go beyond 900 and below 300. You have sometimes the score of -1 in your bank. That -1 is because the person doesn't have a credit history. Doesn't have. Okay. Some banks may perceive 700 as a good score. Some banks may not. Right. Generally 800 is considered as a very good score. Excellent. But depends on bank to bank. Credit scoring model. CICs typically build scores using 3 historical data files. So CIC means what? Credit information companies. Means what? 4 credit information companies. Which are those? I think so I am having the names. Okay, CIBIL, Equifax, Experian, and Highmark, right? These are the 4. So all these 4 take it on means create the data or create the score on these 3 parameters mainly. Defaults of previous credit transactions, then payment history, and previous searches and inquiries. How much loan has the person taken? Searches. Okay. So these are the main parameters. How to manage the credit score? For managing the credit score, following points should be checked always. Credit utilization. How much loan is utilized by that person? Many persons are credit hungry. They go on getting new loans. Payment defaults. How many times the defaults have been there? The fewer the better. Sometimes 1 or twice it's okay. That's called as aberration. Once it happens, then it is not considered that much. Trade attributes. How old are your lines of credit and what type are they? Okay. Means what type means if a salaried person is taking a CC, it means there is a problem, right? Why does the salary person take the CC? What is the positive side of the credit score? A good credit score is indicative that the person is of good financial character. Okay. What are the warnings? Craving too much for the credit, too much loans. This loan, that loan, 1,000 loans, right? I want home loan also, I want personal loan also, I want credit card loan also. I want CC also, everything. Craving for credit. Frequent and unnecessary shopping for credit. Same thing. Several new accounts on reset request. So if I open new accounts, loan accounts also. So that is also wrong. What are the 4 CICs? Just now I told you. CIBIL, Equifax, Experian, and Highmark. These are the 4 CICs used by many of the companies, many of the banks. 3 common credit problems are which? Lack of enough credit history, denied credit application, and fraud and identity theft. So these are the common credit problems. Lack of enough credit history means that's what -1 score. Okay, the person has not taken a loan, so that is also dangerous. Denied credit application. If somebody has been denied a credit application, it means what? There is some problem with that customer, so that is taken as negative. And fraud and identity theft. This also happens. Some person's data is stuck or chipcowed on some other person. Praveen Kumar. There may be 1,000 Praveen Kumars. Okay. What are the mistakes in the credit scoring? Confusion of names, human input error, and identity theft. All these can be solved using Aadhaar number, Aadhaar card details. Here, the name can be same, Praveen Kumar can be same, but the Aadhaar number will never be same. So if you input the data as per the Aadhaar number, then there is no problem in this. Okay. Aadhaar is a solution to everything. Important liability products now. What are the main features of current account deposit? Current deposit accounts are meant for business, right? Non-interest bearing account. It has higher minimum balance as compared to the savings account, right? Why? Because too many transactions. Transactions are heavy in current account. What are the advantages of current account to the customer? It is for trading and business. So if I have to do the business, I have to open this current account. They are mainly opened by the business persons like proprietor, partner, private limited, public limited, LLPs, all this. Okay. What are the documents required? Now see here, I will not cover those documents which are of regular feature, means like originally verified document we have to take. That is common thing. Let it be anything in the bank. You have to take the originally verified document, right? So I won't cover that. Only those which are important, which are not there commonly everywhere. So individuals or singly jointly, a certified copy of OVD as mentioned in the master directions of KYC, right? Containing the details of individual shall be obtained. So OVD is there, and this Aadhaar card is required in a single person. Okay, Aadhaar card is the main document over here. If PAN is there, PAN is okay, but Aadhaar is the main. Sole proprietary firm. In proprietary firm, kindly remember this OVD will be done. That's obviously there. Now the important documents are these: certified copy of any of the two, registration certificate, license from municipal authorities, sales and income tax returns, CST VAT. So any two, compulsory two documents are required in case of proprietary firm. Okay. Partnership firm, the important two documents are registration certificate and partnership deed. Okay, means registration certificate of this partnership and partnership deed. Okay. What about HUF? Now HUF we require two documents. One is HUF deed, which is on the stamp paper, or joint Hindu family letter. If it's not there stamp paper, now it depends on state to state. Okay. Generally in many states they require HUF deed. And then PAN card of the HUF. This is a must. PAN card of the HUF is compulsory. LLP, limited liability partnership. So what do we require in that? LLP, certificate of incorporation, certificate of copy of resolution, PAN card of the LLP. So this is what is required. Minimum document. Certificate of incorporation, copy of resolution, and PAN card of the LLP. What are the limited companies? Now, what do documents require for the limited companies? A certified copy of each of the following: certificate of incorporation, certificate of commencement of business. Okay. In case of public limited, so public limited we require commencement. Incorporation is required in all. Okay, all the companies, public and private limited. Public and private. Okay. And LLP. So certificate of incorporation is in all, and commencement of business is in public limited. Then you require MOA, memorandum of association, and articles of association. Okay, MOA and AOA. MOA includes the purpose of the business. AOA includes the daily working of the business. Okay. Then for cooperative societies, what do we require? Hold on. For cooperative societies, we require certificate of registration, association, clubs, etc. of the society or club if any, right? So certificate of registration, certified copy of the bylaws, and then resolution. Resolution is always there in any of the company where there is a group of managing persons. Okay. Charitable public trust. Here we require registration certificate and trust deed. Okay, this is required. Also, this resolution is a must in this also, in the end. Transgender persons. Now, this is a main new term added. Treating all the transgender persons as a third gender. So, all the application forms should have this third gender column in it. Okay. Transfer of accounts. Now, transfer of accounts means nowadays transfer is not done, isn't it? We have this account number portability. Instead of transferring, earlier we used to transfer the accounts from this branch to that branch. Nowadays it's not required. Whereby the customer is allowed to maintain the same account number wherever he is there in any India, in any city in the India, right? So I can have an account from Tamil Nadu and I can go to Kashmir, right? And I operate on the same account. Inoperative accounts, those accounts which are not operative for last 2 years. Okay, so those are inoperative accounts. But remember, inoperative means no transaction of debit or credit. So important point over here is if I give a standing instruction or SIP, then it's operative account. Kindly note. Okay, who can open the savings account? It can be opened by anyone, any individual, natural or artificial person. It can be opened by societies also. Societies also open the savings account. Okay. As a relationship between the bank and the depositor is essentially debtor and creditor. Okay. Debtor and creditor. Also, the trust can open the savings account. Kindly note, trust. Trust never open the current account because they are not doing business. Savings account of the minor. In minor, kindly remember there are 2-3 points. About 10 years, minor can open the solo account. Below 10 years, minor has to take the help of a guardian. The guardian can be mother, father, or court appointed guardians. Here, mother, father only, or court appointed. It can't be brother, sister, or anything. No, not allowed. Brother, sister can be there, but that should be given by the court then. Okay. What are the documents required for opening the account of the minor? Proof of minor's date of birth, KYC documents of the parents, guardians, Aadhaar card of the minor, signature specimen of the guardian. For minor about 10 years, then signature specimen of the minor, because there we are opening the solo account. No OD facility is granted. A minor is any person below the age of 18. Whenever the minor becomes major, within 6 months, we have to take a letter from that minor that all the transactions in the account are acceptable. Savings account for illiterates. So no checkbook facility should be extended to the illiterate. Joint account of the illiterate can be opened with the literate close relative. Okay, father, son, husband, wife, mother, and daughter, but no cousins. Okay, so for illiterates, they can open a joint account with a literate person. Now, blind person. Blind person is always a risky. Risky means you have to open the account, but you have to be cautious. What is the cautious means? Blind person can tomorrow say that I don't know what the terms and conditions were. They were not explained. Terms and conditions were not properly told to them. This can happen. The bank may consider permitting next kin, means nearest relative, of the visually impaired person to operate the account as the representative of the visually impaired person by taking letter of authority and the undertaking. So you can allow somebody, some near relative, as per the authority letter of that blind person. Savings account of the incapacitated, handicapped, old, sick. The person may be requested to give a suitable power of attorney, okay, to a person of his or her confidence. So suitable POA can be given. He can put the thumb impression, which is witnessed by 2 independent witnesses. Okay. Many a times it happens, na? The person is on the in the bed, on this hospital bed, and we have to withdraw the money. So in that case, this thumb impression can be done. 2 independent witnesses. Now, Pardanashin woman, she can open the savings account, and bank is required to take the photograph while opening the account. Photograph is required. However, a photograph cannot be used as a substitute for specimen signature. Specimen signature is also compulsory there. These basics are there. So there is no difference in opening the account of a Pardanashin woman. Now, time deposit. Minimum days of time deposit is 7 days for deposit up to 15 lakhs or 15 lakhs and above, and minimum 15 days for amount less than 15 lakhs. Okay, so 7 days for 15 lakhs and above, and minimum 15 days for amount less than 15 lakhs. Okay, banks accept FD not exceeding 120 months, means 10 years. Your FD cannot be more than 10 years. Okay. So if you are taking a FD about this 12 months, effort should be made to accept the deposits in multiples of 3 months. Okay. So you must always try to tell the customer, kindly make the FD in terms of 3 months, means for 12, 15, 18, 3 months quarterly. Okay. Try. I don't say compulsory. Customer can say, no, I don't want. I want it for only 16 months. You can't help it in that case. Term deposit can either be opened as a EORS, either a survivor or singly, right? Or jointly, or former or survivor. It can be that also. Okay. So these are the instructions. Singly, EORS when there are more than one persons. Jointly, okay, jointly can also be there. Then it can be former or survivor. Former, survivor, jointly, and last survivor. This is not taken. Generally take former or survivor only. Latter or survivor. This is also one instruction. Latter means second person. But that is also nowadays not taken. We follow generally these three only. Singly, either a survivor or jointly means two persons, and former or survivor. What is a cumulative FD? Cumulative FD means the interest of that FD is deposited constantly in the FD only. Customer can choose to have the interest reinvested in the FD account. This is cumulative. Okay, so interest will be reinvested. So I get interest on interest. Simple FD means interest is paid with the invested amount on maturity of the deposit at the end of the term. Okay, so that is simple in FD. There is also a monthly FD. Okay, 15G and 15H form. Here, firstly, why is it used? It is used if the taxable income on your deposits, including a saving and saving and FD, both. If it goes more than 40,000 in a year for any person other than senior citizen. For senior citizen, the limit is 50,000. Okay, if it goes more than 40,000, then bank has to deduct the TDS. If you want to save that TDS, then you have to fill up this 15G and 15H. H is for senior and G is for means regular, less than 60. This is as per the section 194A of Income Tax Act. Okay, bank will total the income of all the accounts and all the branches. Kindly note, all the branches also. Okay, so 15G and 15H. It is for resident individual and HUF, G, and H is for only resident individual above 60 years. Okay, senior citizen, and G is for less than 60. This is for HUF and resident individual, G. Okay, kindly remember this. The total interest subject to less than the basic exemption limit of 2.5 lakhs. Now this 2.5 is shifted to 3 in the new tax regime. Okay, for the new tax regime it is 3 lakhs. If your income is less than 3 lakhs, then you can fill up this 15G form. Got it? Even 15H, if your income should be less than 3 lakhs. Note that the benefit of 15G and 15H cannot be claimed by non-residents. It is only for Indian resident. Okay. What is 2-in-1 account? 2-in-1 account means there are two types of accounts. One is auto sweep, or we call it sweep in. Okay, sweep in or auto sweep. Second is reverse sweep or sweep out. So auto sweep or sweep in means what? If there is a balance in FD, means if you have a FD account and there is less balance in savings account and you have linked those two under sweep in. If the check comes for clearing, then your FD is broken and funds are transferred to savings account. Okay, this is how sweep in works or auto sweep works. What is reverse sweep? Reverse sweep means if you are having huge balance in savings account and minimum balance is MAB is let's say 10,000, but you are having 2 lakh rupees every day, you are having 2 lakh rupees, then you are losing on interest. In savings, what is the interest you get? 3.5. So what should you do? You must transfer the remaining amount to your FD automatically. So that is called as reverse sweep. These are the systems now. Okay, so reverse sweep. This allows you to transfer the extra money to FD. RD. What is RD? A recurring deposit may be opened by the following. Now this, many of you know what is RD. You have worked in the banking, right? It can be opened by a person in his own name. By more than one person in joint names, it can be opened. Now again, the instructions can be anything, either a survivor, both, jointly, okay, former or survivor, anything. By minor of age 10 years and above, on terms laid down by the bank. Okay, so about 10 years, that minor can open this RD also. Nomination. Nomination forms for deposit accounts kept in articles kept in safe custody and contents for safety lockers. So nomination is for what? Deposit and your lockers. Okay, mainly these are the two elements. For means what is this? For cancellation and variation of nominations, means basically you can cancel this also anytime. Now the point about nomination is, kindly note, for deposit accounts there is only one nominee. Deposit accounts only one. Okay, and for lockers and safe deposit articles it is more than one. You can give more than one. Okay, more than one allowed. Okay, there in account you can't have more than one. Got it? Clear? Deceased depositor, 45 ZA and 45 ZF of BR Act and the banking company's rules. So deceased depositor processing is under this. So if there is a nominee, then there is no problem. Directly the money is transferred to the depositor. But if there is no nominee, in that case you have to bring the indemnity. Okay, indemnity from the near ones, and then fill up the form. There is the indemnity process. Okay. What are the important retail asset products? Now next chapter, retail asset products. Home loans, vehicle loans, personal loans, education loans, mortgage loans. Right? Home loans. What is the percentage of home loans given? Home loans are always given from the range of maximum 90% and up to lower range of 75%. Means bank can give up to 50% also. That's not an issue generally. So 90% up to 90% loan can be given. This where the property is mortgaged. Okay, it is equitable mortgage. We always do the equitable mortgage. Got it? So property is always mortgaged in home loans. What about vehicles? Vehicle loan is also given up to 90% nowadays. We give it car loans. Okay. In this, the property this car is hypothecated HP. Okay. Then personal loans without any guarantee. No security, no guarantee, no guarantor, nothing. Only based on the CIBIL and the financials. So PL can be given up to what amount? It can be any amount. PL can be given up to 20-25 lakhs also. Okay. Education loan. Education loan is given always for education in India or abroad. Mainly I'll tell you the priority sector loan comes under 10 lakhs for India and 20 lakhs for abroad. This is education loan. Okay. The loan is given a moratorium period of up to the education time plus 1 year. So if the degree is for 4 years, 4 years plus 1 year, 5 years is the moratorium period. After that the EMI starts. Okay. Mortgage loans. Mortgage loan means what? All this LAP, loan against property, okay, loan against your shop. All these are mortgage loans. So they can also be given, but these are commercial loans. Okay. The rate of interest is higher than your home loans. Don't mix it with home loans. Got it? Next is PMAY. Important question which comes on PMAY is this. Okay. When was the scheme started? 2022. Okay. Means it was launched in 2015, not 2022. 2022 was the year in which everyone should have the housing. What is the subsidy? See, this subsidy is up to 6.5%. I'll show you what is the subsidy. Firstly, know who are eligible for PMAY. Kindly note there are four categories: MIG1, MIG2, LIG, and EWS. MIG1 means middle income group. So the income group is from 6 lakhs to 12 lakhs per annum. MIG2 is 12 lakhs to 18 lakhs. MIG2. Okay. Lower income group LIG is from 3 lakhs to 6 lakhs. And EWS is from up to 3 lakhs. So only these persons are eligible for the PMAY loans. Again, remember, you will definitely get a question on this. MIG1 and 2, remember this first. 6 lakh to 12 lakh, 12 lakh to 18 lakhs. LIG is what? 3 to 6 lakhs. And EWS is up to 3 lakhs per year. Okay. So what are the subsidies available then? Look at the subsidies. Look at this. For EWS, the subsidy is 6.5%. For LIG, the subsidy is 6.5%. For MIG1, subsidy is 4%, and MIG2 it is 3%. Okay. Maximum loan subsidy is this much. Maximum you can give it up to 6 lakh, 6 lakh, 9 lakh, and 12 lakh. Got it? Remember, you will definitely get a question on this as well as the above one. Be sure about it. Okay, you will definitely get the question on both of them. It's not at either. Both of them you will be getting the question. MIG1 is 6 to 12, MIG2 is 12 to 18, LIG is 3 to 6, and this EWS is up to 3 lakhs per annum. Similarly, the subsidy is 6.5%. Okay, 6.5 for EWS, then 6.5 for LIG. MIG1 is 4% and MIG2 is 3%. And the amount, look at this: 6 lakh, 6 lakh, 9 lakh, and 12 lakh. Remember these, okay? Without fail, remember these. Next, home loan, home improvement loan. This is home improvement, means you can also call it a decor loan, home decor loan. That is also, it can be called as that also. Okay. So home decor loan or home improvement loan, one and the same. So it is given up to, see, this margin is kept up to 20% to 50%. This much is a margin. Maximum loan given is 75 lakhs. Home improvement, decor, everything. Okay. The property is mortgage. Equitable mortgage is done. What is equitable? Just exchange of documents. Okay. Processing of retail loans. There are two methods. One is standalone, second is centralized. Definite, sure question in the exam. Standalone means what? Branch does everything, right from filling up the form of the loan, then processing, analyzing, checking the documents, disbursement, and monitoring. Everything is done by the branch. In CPU model or centralized model, branch just acts as a courier person. So branch will do what? Just get the documents and send it to the CPU. CPU will further process this, analyze this, disburse this. So up to disbursement, CPU does the job. Okay. See this. These are the advantages of centralized processing unit system. It is based only on documents, standardized approach, exclusive activity. Hence it is much faster. TATs are adjusted or they are maintained. Quality will be uniform. Processing time will be uniform. Right? So TATs are maintained. Uniform and impersonal appraisal standards. Professional documentation standards because of CPU. Because in branches what happens? We know the customer, we can be biased, isn't it? Now credit card size is asked sometimes. 318 inches by 218 inches. It is based on the concept of buy now, pay later credit card, and debit card is based on buy now, pay now. Credit card is of two types: proprietary format or co-branded format. What is proprietary? Proprietary means individual bank's card. SBI card, PNB card, BOB card. Okay, so that's proprietary. It can be of various names: gold, silver, and platinum. Co-branded means between two companies, SBI plus HPCL, co-branded. PNB plus HPCL, BOB plus BPCL. It can be anything. You can have it with the shopping malls also. Okay. Credit card issuing process. Issue of credit card involves the following processes: obtaining the application from the prospect, processing the application, analyzing and arriving at the credit score. Okay, so these are the basic steps: obtain, process, and then analyze and arrive at the credit score. What are the charges? Here the charges for credit card are main, remember, finance charges, minimum amount due, minimum interest free period, annualized percentage rate, and other charges means fees and everything. Okay. So where are the charges mainly applicable? When the customer doesn't pay on time. If the customer pays minimum amount due, then on the remaining amount it is charged. Okay. Also, if the customer uh, takes the EMI option in the card, then also this finance charges are applicable. Okay. So these are the charges, kindly remember. What are the prepaid cards then? Prepaid card means the amount is already filled in that cards. This can be gift card also. Prepaid cards have radically changed the way individuals pay for the purchases on daily basis. Most individuals tend to pay using their card rather than cash. They can be gift card, payroll card, student card, virtual card, anything. Got it? Prepaid instruments. Prepaid payment instruments. Now, prepaid payment instruments can be issued in the country are classified under three types. So, what are the three types of prepaid payment instruments? Closed system PPIs, semi-closed, and open. What is each one? Closed system. These PPIs are issued by an entity for facilitating the purchase of goods and services for entity only and do not permit cash withdrawal. So no cash withdrawal is allowed. Closed system. Okay. Do not permit cash. Semi-closed. These PPIs are used for purchase of goods and services, including financial services and remittance facilities. Okay. So here remittance is allowed, financial services allowed. Open. These PPIs are issued only by banks and are used at any merchant for purchase of goods and services, including financial services, remittance facilities, etc. What is the cash loading limit? Cash loading to the PPI shall be limited to 50,000 per month, subject to overall limit of the PPI. So maximum limit is 50,000. Prepaid payment instruments. Okay. Now this credit card issuance. See, this is the main process in credit card issuance. If you see, now it can be Visa, Master, or RuPay also nowadays. So card issuing, this can tie up with this bank. The bank will issue either proprietary or co-branded, right? So proprietary can be, as I told you, classic, silver, gold, platinum, etc. It's in the single name, and this is in the name of two companies, co-branded. Okay. Now next topic is remittance products. What are the traditional remittance products? Banker checks, demand draft, right? These are the old system. Even ECS is a traditional one now. Okay. Now ECS doesn't work. So we won't be covering ECS that much, because it is not there now working. Everything is now NAC. Okay. So RTGS. RTGS means real-time gross settlement. Minimum limit is 2 lakh. Maximum limit, there is no limit. You can make the RTGS up to any amount. Okay. What are the fees? 2 lakh to 5 lakhs, not exceeding 30 rupees. Above 5 lakhs, not exceeding 55. NEFT. NEFT is no upper limit, but lower limit is rupee 1. What are the fees? Up to 10,000, 2.5 rupees. 10,000 to 1 lakh 5 rupees, 1 lakh to 2 lakh 15 rupees, and more than 2 lakh it is 25 rupees. Okay, so this is for NEFT. Okay, NECS, National ECS. Now this is electronic clearing services. It is gone now. You only remember some important parts about this because ECS doesn't work now. Electronic clearing services, ECS credit. So one to many means one debit to many credits. This is used in dividend distribution or your subsidies. Okay. Second is ECS debit. It means many to one, or it's called as debit pool. Many to one means what? Debit to many and credit to one. It is used in installments, EMI. From many customers it's debited and credited to one customer who has given the loan. Now NPCI, National Payments Corporation of India, it's an umbrella organization for operating retail payments and settlement systems in India. It is an initiative of RBI and IPA under the provisions of Payment and Settlement Act 2007 for creating a robust payment and settlement infrastructure in India. RuPay, a new credit card, a new card payment scheme launched by NPCI, has been conceived to fulfill RBI's vision to offer domestic open loop multilateral system which will allow Indian banks and financial institutions in India to participate in electronic payments. Okay, so this will allow, because of RuPay, what has happened, the data is kept within our country. In Master and Visa card, what happens, the data goes to USA. So here the data is kept within our country. NPCI offers RuPay credit card, RuPay debit card, RuPay prepaid, RuPay global card. Okay, so NPCI offers various RuPay cards. What are these variants? Look at this. Important ones I'll just give you. And the charges. Variants parameters. Okay. So select and platinum. Remember these two. RuPay select and RuPay platinum. Select is what? Personalized. Yes, yes. Insurance amount 10 lakh for loss or life or loss of life or permanent disability. Select. And under platinum it is 2 lakh. Okay. So select is super premium, higher card, higher level card. Loan program. 4 free access per year in 300 plus cities across the world. 4 free access, loan. In platinum premium nothing. Okay. Fuel surcharge waiver, maximum 75 rupees per card per month in select. And in platinum, maximum 75 rupees per card per month. So that is same. Utility bill, cashback, maximum 50 per card per month. Here 50 rupees per card per month, same. Mobile cash wallet back, cashback, 50 rupees per month, same over here. 50 rupees per month for minimum transaction of 500, both same. IRCTC cashback, 25 for minimum transaction of 300. Same thing over here. Okay. So select and platinum, these are the two variants. Okay. Only the insurance amount differs mainly. Insurance and loan program, these two differ mainly. Okay. Bharat QR. A QR code system of black squares arranged in a square on a white background, which can be read by imaging device such as camera. QR contains information about the merchant. Okay. Nowadays we use QR code everywhere, isn't it? Everywhere you have this QR on the UPI system. So it contains the details of the merchant, isn't it? AEPS, Aadhaar enabled payment system, is a bank-led model which allows online interoperable financial transaction at POS through the business correspondent, bank mitra of any bank using Aadhaar authentication. So Aadhaar enabled payment system means interoperable financial system. You can go to any bank mitra or BC of any bank using any card, and you can withdraw the money. Okay. There are many services offered by AEPS. Main one are these one: cash withdrawal, cash deposit, balance inquiry, Aadhaar to Aadhaar transfer, mini statement. So these are the services offered under AEPS: withdrawal, deposit, balance inquiry, Aadhaar to Aadhaar fund transfer, and mini statement. Okay. Bharat Bill Pay System. This is for payment, bill payment. Bharat Bill Pay has multiple modes of payment and provides instant confirmation of payment via SMS or receipt. Okay. So you can have instant confirmation. You can pay through internet also, pay through app also, pay through this kiosk also. Okay. Different payment channels. There are various payment channels. As I told you, various channels. Okay. Kiosk, ATM, internet. Okay. Different payment modes. Okay. You can pay through the agent also. You can pay through the internet online also. You can pay through the bank also. So these are the modes. What are the advantages of Bharat QR? See this. The advantages over here are Bharat Bill Pay System. The advantages are Bharat Bill Pay is an integrated ecosystem connecting banks and non-banks in bill aggregation business, billers, payment service providers, and retail bill outlets. So Bharat Bill Pay is an integrated ecosystem. It connects each and every bank. Accessible, facilitates seamless access. Seamless, you can do it 24 hours at any time. Okay. So 24 hours access is allowed over here. Cost effective, very less cost, means fees are almost nil. Flat fee charge and current charges. Okay. Integration, BBP OU will have to connect only to BBP CU. See here, there are two things, OU and CU. Okay, what is BBP CU and what is BBP OU? See, these are CU is central unit and OU is operating unit. Now, OU can be of two types: customer operating unit and biller operating unit. Okay. So BBP CU is a main party. It will connect with both BBP OU on both the sides, customer also and biller also. Okay. BBP CU will collect the funds from the customer, pass it on to the BBP. OU will collect the funds from the customer side. It will pass it on to BBP CU. Then BBP CU will pass it on to the biller. Okay. BBP OU of the biller. Okay. This is the whole process. Okay, from customer to COU, COU to CU, CU to biller OU, BOU, and then to biller, and that billing company's account. Okay. Now, digitization. Next topic: digitization of retail products. Now, this is already covered: horizontally organized model, vertically organized model, predominantly horizontally, predominantly vertical. We have covered this earlier. So same thing is there. Next, technological initiatives in the same topic. Foreign banks, new generation private banks, old generation private banks, and public sector banks. These are the four types of banks. Outsource model is followed in foreign banks. This also I think so we have done it. Outsource model. Okay. Completely from IT companies. Blended model, combination. Some part in outsource, some part is done in-house. Now this is followed by new generation private banks and old generation private banks, blended. Public sector banks follow proprietary model or in-house model. It is completely done in-house. Remember, in any technological part, the information is of four types: static information, dynamic or updated information, transaction information, and analytics and alerts. There are four types of information over here. Okay. So static means which does not change. Name of the person, this date of birth, then address generally. These are all static which don't change. Updated means what? It changes. Financial details, salary, what all are the assets which the customer is having, because they change generally. Transaction means what are the purchases the customer is making, where the money is getting spent. Analytics and alerts means it gives you the idea that what are the points which are to be checked, key points, where the customer balance goes below 10,000, that is an alert. If there's a big transaction in the account, that's an alert. So these are all the types of this informations. Okay. Institute for Development and Research in Banking Technology, IDRBT. The Reserve Bank of India constituted a committee on technology upgradation in payment system in the year 1994 under Sri W.S. Saraf. Kindly remember the name. Okay, the technology part came because of W.S. Saraf. So first question which is asked is infinite. Various times this infinite is asked. All your SFMS, RTGS, NEFT, ECS, online processing, trading in government securities, everything is implemented using infinite only. Infinite is a closed loop system between the banks. It's only for the banks. Fund transfer such as NEFT and RTGS is being done through infinite only. Okay. SFMS, National Financial Switch, Indian Banking Community Cloud, IBCC. All these are the technology initiatives. Okay. What is this SFMS? See, the Structured Financial Messaging System is a secure messaging standard developed to serve as a platform for intra-bank and interbank applications. So all this NEFT RTGS is a part of SFMS only. Who also guarantees are issued on the basis LCs and guarantees, internal inland LCs are issued under SFMS only. NFS is what? National Financial Switch is the largest network of shared automated teller machines. Thus, NFS functions as a backbone of Indian ATM network. So it's a network of ATMs. Okay. NFS was designed and implemented by IDRBT, Institute of Development and Research in Banking and Technology. Now IBCC, Indian Banking Community Cloud. So cloud computing is a promising technology that provides various services to the customers on demand over the internet. The ease of this technology is increasingly expanding in almost all the industries across the globe for its resulting benefits. A community cloud can possibly be a solution where cloud services are meant for organizations having common objectives and security controls to furnish cloud services to such like-minded organizations in India, right? So IBCC is what? Basically cloud computing. So cloud computing means what? Basically use of internet, free internet machines that provides various services to customers on demand over the internet. Okay. So basically this is IBCC. Next. Now let's focus on MIS and securitization. MIS part. Management Information System is an information system used for decision making and for coordination, control, analysis and visualization of information in an organization. So basically decision making, coordination, control, analysis, basically all these parts. Okay. The study of MIS involves people, process and technology. In corporate setting, the ultimate goal of using MIS is to increase the value and profits of the business, right? So this is the main part. The job is dependent on CIO and CTO. I mean, these have the main role. Okay. What are the main elements of MIS? The main elements of MIS are an integrated system to give access to many users, computer system linking some of the information software via database, user machinery interface responding to temporary and immediate searches, presenting the information to all top management levels and supporting the operation and decision making. So these are the elements of MIS. Okay, kindly go through this, everyone. Okay, what are the various types of MIS? DSS, Decision Support System. Now this is mainly used by middle and top management. These are for middle management and higher management for problem solving, decision making, semi-structured and unstructured decisions. Okay, so DSS is used for problem solving and decision making by middle and top management. EIS, Executive Information System, means it will give the information, means summarized reports of all the things. So it is again for the middle and the top management. These are the parts of MIS. MKIS, Marketing Information System. These are management information systems designed specifically for managing marketing aspects of the business. Only marketing. Accounting Information System, only for accounting. So it manages the accounting functions. HRMS. Now this is also a part of MIS only. HRMS is used for personal aspects. Okay. HR related, leave, approvals, all these. TPS, Transaction Processing System. It is used for day-to-day transactions. All, whatever cashier, clearing, transfer, whatever we do, that's under TPS. OAS, Office Automation System, means workflow, from where the work will flow to where. Okay, it supports communication and productivity in the enterprise by automating workflow and eliminating the bottlenecks. OAS may be implemented at any and all levels of management. ERP. ERP software facilitates the flow of information between the business and the inside the boundary and the external stakeholders, means basically the customers. Okay, so ERP is a link between the organization and the customers. What are the benefits of MIS? It improves the operational efficiency, value of the existing products. It gives it helps in new product development. It gives better decision making. It helps in SWOT analysis. Okay, so this is about MIS advantages. What is data warehousing? See this, data warehousing and data mining. These questions are asked in the exam. Warehousing means keeping the data in an organized form. Okay, so combines the data and information collected from various sources into one database. And mining means what? Retrieving of that information. So sorting of the information and retrieving of that information whenever we require. That's basically data mining. Okay. Securitization. This question is also asked in exam. Securitization. What is this? It involves basically, see this, three companies. One is a bank, second is the SPV, and third, these are the two companies involved, and the remaining ones are investor and customer. See, it's like this. First, bank gives the loan to the customer. Let's say home loan. See this, so process number 1. I have marked it as number 1. So bank will give a loan to the customer under process number 1 over here. Okay. So what will this happen further? This loan is sold to a SPV, a separate company, special purpose vehicle. Okay. It is sold to this company. Live loan means not only single, there are many loans together which are sold. So this is called as SPV. Sold to this. This is process number 2. What does the SPV do? SPV will further sell it to investors at lower rate of interest. So this is the whole process of securitization. SPV will give cash to the company, bank, and SPV will further sell it to the investors and get the cash. Okay. SPV means what? A separate company like SBI Capital is a SPV. Okay. So this is about securitization. This process is asked. Remember, there are 3 steps. Step number 1, loan given by the bank. Step number 2, loan sold to the SPV, and SPV gives the cash. And step number 3, SPV further sells it to the investors. Okay. What are the types of securitization? See here, there are 2 types. One is CBLO and second is CLN. One of them will be asked to you in exam. CBLO means collateralized bond obligation. It is a type of structured debt security that has an investment grade bonds as an underlying asset backed by the receivables of high yield or junk bonds. High yield means higher returns. Okay. The structured debt instruments is securitized by packaging a large number of bonds with varying degree of credit quality. Okay. What is credit linked notes? Credit linked notes is a form of funded credit derivatives. Okay, funded credit derivatives. It is structured as a security with an embedded credit default swap, allowing the issuer to transfer special credit risk to the credit investor. So remember these two parts. I won't go into details now because in the paid classes I have taken it in huge details. So CBLO is basically a type of structure in which the uh, collateralized bonds means basically home loans. Many home loans are combined together and sold to the SPV. That's the basic logic of CBLO. Large number of bonds or loans are sold to the SPV. Whereas in CLN, we sell a specific risk. For example, if Reliance, I give a loan, if I am bank and I give a loan to Reliance, so that loan is sold to the SPV under securitization, under CLN. Okay. Now let's focus on marketing in retail banking. So the process of marketing comprises different stages. What are the stages? Marketing analysis, marketing planning, marketing implementation, and marketing control. Remember these four stages. Analysis means it will involve strength, weakness, opportunities, and threat. Marketing planning means planning for each business product or brand is drafted. This is called as offering. So offering question comes in exam. What is offering? A marketing plan for each different product is offered basically. Marketing implementation. So implementation of the plan. This depends on blending the people, culture, and structure, and reward systems. Marketing control. So this can be done in two ways: reactive method and proactive method. Now reactive means what? If any query arises, then you will solve it. Proactive means first only you will solve it. Okay. What are the various mixes, marketing mix in retail banking? See, already we have covered this 4 P's and 7 P's. 4 P's means product, price, place, promotion. These are the 4 P's in product banking. And in the services banking or services marketing, we have 7 P's: product, price, place, promotion, and people, process, and physical evidence. Okay, people, process, and physical evidence. This is a newly added. This proactive and reactive approach means this type of proactive approach is completely different from the reactive. Means first you'll solve the query first only before it comes with the customer. What is the use of this marketing approach? It improves the customer relationship. Share of wallet. What is share of wallet? Maximum funds of the customer should pass through our bank. Okay, the customer should invest in saving, FD, mutual funds through our bank only. Home loan, personal loan, maximum amount should pass through our bank. At least 6 products should be sold to each customer. What are the various delivery models? Now the 3 human interventions in physical channels are internal customer, that is staff, specialized marketing personnel, and DSA. So these are the human interventions. So internal means customer will have the human interface or human touch with whom? With these 3 persons. The customer will either come to the branch, or our marketing manager will go, specialized marketing personnel will go and visit the customer, or the DSA will visit the customer, or PC also, DSA or PC. Okay. These are the physical channels. What are the alternate channels? Net banking, app, mobile, telephone, social banking, right? Social media. All these are alternate channels. So these are the various delivery models. Dedicated marketing managers or the specialized marketing personnel. They basically, what do? They go to the customers and reach to the customers. Why have they come in? Because the private banks and nationalized banks, foreign banks, had the DSAs, external agencies. So nationalized banks, what did they start? They started their own marketing personnel, this marketing manager, to go and speak to the customer. What is the role of these See here, the role of these is marketing managers is to go, because he is a bank employee, he or she. So he goes to the employee, to the customer, collects the business, and does the brings more business to the bank. DSAs and BCs, they also do the same thing, but they are outsourced entities. Their income depends on the business which is generated. Okay, see this DSAs. The concept of DSAs was pioneered by foreign banks. DSAs are agencies appointed by the banks to source business on fee basis. Banks do not have banks which do not have a branch penetration, means where we don't have the branches, there DSAs can go, isn't it? BCs are appointed by nationalized banks. These are similar to DSAs. BC is an extension of bank itself to provide banking related services in areas which do not have the access to such services. So similar to DSA. The intent of BC is financial inclusion. The scope involves what? The BC scope is managing the money, explaining the people how to manage the money so that they don't fall into the debt trap. Okay. Now, next topic. What is CRM? Customer relationship management. Is it a technology of managing your company's relationship and interactions with the customers and potential customers? So CRM is basically for HNI customers. Okay, high net worth, who are having huge money. Okay, obviously you'll try to get those customers who can give you maximum business. The goal is simple: improve the business relationships. With a shift in the buyer's market in the banking services, retaining the existing clients is equally important nowadays, along with winning the new customers, isn't it? So this is the basic purpose of CRM: maintaining good relationships with the clients and sourcing business from them. There are three elements to this CRM. One is customer, then the relationship, then management, isn't it? So understand each word separately. Then increase operational efficiencies, more business per employee. We must try to get as much business as possible from the employee, per employee. More business we get, more will be the profit to the bank. CRM systems can also give details on customers' personal information, purchase history, buying preferences, everything, isn't it? What are the important points involved in CRM initiative? One is customer's profile, capturing the customer's profile, knowing the customer. Means what is the customer profile, in the sense what is the income level, how many family members, what are the assets, what are the investments. Dissecting the profiles in common information buckets, designing suitable products for those HNI clients. Okay, means HNIs require different products than your normal customers because they are having huge money. They require investment in various structured products, mutual funds, stocks investment, offering the products and at the right pricing. So you should be in the competition. The pricing should be correct. Okay, providing the right sales and service. Okay, and it's a dynamic basis. It's done on a dynamic basis. Means it's constantly changing. Okay, constantly changing means today whatever is the CRM model, it won't be there after 5 years because technology will have changed, the requirements of the customers would have changed, everything. Implementation process of CRM involves 5 stages: reach, lead acquisition, lead conversion, customer retention and loyalty. So these are the 5 stages: reach, lead acquisition, lead conversion, customer retention and customer loyalty. Customer relationship management implementation is a process of installing CRM software so an organization can manage current and potential customer relationships. Okay, so this is about CRM. Now let's focus on what is MKIS, Marketing Information System. Marketing Information System is a continuing and interacting structure of people, equipment, procedures to gather, sort, analyze, evaluate and distribute pertinent and timely information for use by the marketing decision makers to improve their marketing planning, implementation and control. So what do you mean by this? It's very simple. It's gathering the information, segregating it and providing it to the concerned staff so that they can take proper decisions, isn't it? What are the elements of MKIS? Look at this. There are three elements of MKIS. One is input, second is processing, and third is output. See this: input, processing, and output. Okay, look at the arrow, this cursor of mine. Input means what? I collect the information from where? Various elements: markets, technology, various channels, economy, competitors, what are the regulations, rules and regulations. So marketing environment involves all these. Okay, markets, technology, channels, economy, competitors, and law. All these will give me the data. Because see this, every time markets are changing, technology is changing, economy is changing, competitors are changing, isn't it? So this input will be given to me, and there are four elements now. These four elements are asked in the exam: internal reporting system, marketing research system, marketing decision support system, marketing intelligence system. These four elements are the elements of MKIS. So data goes over here and then it gets processed through all these four. And then it goes to output. Remember these four names: internal reporting, marketing research, marketing decision support, and marketing intelligence. Okay. Name itself, it gives you all these things. Research means what? Doing the marketing research, going to the customers and asking, giving the form, filling the form. Okay. Internal reporting system means what? The data flow to each department separately. Decision support system already I have discussed in MIS. It is for the higher top level management for taking the appropriate decisions. And intelligence means knowing what is going to happen in future. All these are interconnected. Okay. And then we go to output. Output means what? This information, once it is segregated and properly processed, then this data, this is the data. This data gets converted to information, and this information will move on to the top management or the middle management for strategic, control, or operational decisions. Okay, this is the basically MKI system. What are the steps in marketing research? Now this marketing research involves problem definition and objective setting, developing a marketing research plan. Now this plan is different. For FMCG products it will be different. For big Mercedes-Benz it will be different. Means FMCG will have a mass class, whereas in Mercedes-Benz you will have a selective class, rich class. So it is different for different categories. Implementing the research plan and interpretation and reporting to the top management. Okay, so these are the steps in marketing research. Okay, now let's focus on wealth management. What is wealth management? It's an exclusive form of financial management that combines financial and investment advice, legal and estate planning, tax and accounting services. Means it includes everything. Okay, it includes your it includes your financials, investments, legal, tax planning, estate planning, everything. Means everything under the sun of finance or money comes under wealth management. Such services are extended by financial services firms or credential specialists or specialized persons, means those who are knowledgeable. Okay. What are the stages? There are 6 stages in wealth management: gathering the financial data, establishing the financial goals, auditing and analyzing the portfolio, recommending the financial plan, implementing the plan, and monitoring and reporting of the plan. Okay, so these are the 6 stages: gathering the financial data, establishing the financial goals, auditing and analyzing the portfolio, recommending the financial plan, and implementing the plan, and monitoring and reporting of the plan. So these are the stages. Remember this. What are alternative assets? These are non-traditional assets. Means like some painting, that's a non-traditional asset. Some precious metal. Okay. So potential, which has potential economic value. Okay. Due to unconventional nature, it is very difficult to. You can't say anything about a painting. I can say the painting belongs to 1 crore. you can say the painting is of 10 rupees. Okay. So arts and antiques, precious metals, all these are alternatives. What are the various types of bonds? Traditional bond, callable bond, fixed rate bond, floating bond, puttable bond, mortgage bond, zero coupon bond, serial bond, and extendable bond. And one more is James Bond, isn't it? Okay. So traditional bond means, remember, in every bond you have 5 elements. You have studied this in your AFM. 5 elements. Okay. Face value, coupon, duration, market price, and market value. So traditional bond means that, which is having all these elements. Callable means what? It can be called by the issuing company anytime. Called by the issuing company. If I have issued a bond, I can call that bond anytime. Fixed rate bond means the coupon is fixed. Floating rate bond, the coupon is based on the repo rate, repo or some benchmark. Puttable means the investor can submit the bond anytime. Here, callable was whom? If SBI has issued the bond, SBI can call it anytime. That's callable. But puttable means if the customer can go to SBI anytime and tell them that take your bond, give me my money back. Mortgage bond means which is backed by mortgage, means basically home loans, roughly home loans. Zero coupon bonds they are issued on discount. These are generally T-bills, treasury bills. Okay, they are issued on discount. They don't have any interest. No coupon is paid. Serial and extendable bond, it's not there for your portion. Mutual funds. What are the various types of mutual funds? Open-ended, closed-ended. Open-ended funds means we are purchasing directly from the company. Closed-ended means you are purchasing from the stock market, secondary. Okay. Open-ended means these are equity, debt, and money market. Equity, debt, and money market. And balance is a combination. Balanced mutual fund is combination. So equity linked and debt combination is called as balanced. Money market invests in totally T-bills, treasury bills. Okay. Closed-ended means these are related to bonds. These only invest in bonds. These are for capital protection and fixed maturity. Okay. What are the types of insurances? Insurances are various types. One is life and non-life. Okay, non-life includes all your general insurances. Health insurance, bike insurance, car insurance. These are all term insurances. All your general insurances, term insurance. Life insurance is of two types. One is term, second is endowment. Term means what? Whatever you pay as a premium, you don't get it back. It's gone. Endowment means what? Whatever you pay as a premium, you get it back at the end. Now, endowment can be money back also. What is money back? Money back means you get the money back after every 5 years. Suppose if the life insurance is for 20 years, so every 5 years you'll get some money back, whatever has been accumulated. That is money back. And in regular endowment, you get the money at the end of the period. Okay. Now let's focus on investment management. Investment management includes asset allocation, financial statement analysis, stock selection, monitoring of existing investments, and portfolio strategy and implementation. So it includes what? So related to investment. Wherever you have to make the investment, all these things will be looked at. Portfolio. Do not put all the funds in the same sector. Monitoring of the existing investments, checking the investment whether they are performing or not. If they are not performing, then we'll turn back and look at some other investment avenues, right? Investment management may include financial planning and advising services, not only overseeing clients' portfolio but coordinating with other assets and life goals. Here, life goals are very important. Life goals means what? You must know what the client wants. If the client wants lesser risk, then you will invest in bonds. If the client wants higher risk, you will invest in shares. Okay. So, depending on the client's goals, you have to make the investment. Financial statement means what? It includes balance sheet, P&L, and cash flow statement. Now, in corporate finance, there is investment management, which includes ensuring companies' tangible and intangible assets. So even investment management is applicable to corporate finance also. Okay. Steps in investment management: deciding on the investment goals, analysis of securities, construction of portfolio, evaluating the portfolio, and revision of portfolio. Means first decide the goals, what the customer wants, high risk, low risk. If the customer wants high risk, select the securities accordingly, which will give higher returns. Rule is simple: high risk, high returns. Then analysis of securities. Okay, analyze the securities, whatever securities are available. Construct a portfolio construction. Okay, maximizing the so here portfolio construction means what? We have to maximize the returns and minimize the risk. Evaluate the portfolio, whether it's performing, giving the expected results or not, and revise the portfolio. If it's not, then revise it, change the portfolio. Investment banking is a special division, okay, in financial or investment management. It deals with governments, corporates. It deals with C2C, means B2B, business to business. Okay, it deals with governments, corporations, institutions providing underwriting services. Underwriting means what? These are for capital raising, IPO. Mergers and acquisitions. This is for companies. So investment banking works for companies. Okay, it's a part of investment management. There's a slight difference in that. In investment management, actually, you have HNI clients who have money, and in investment banking, you have clients who don't have money. So our job is to match the HNIs with the companies so that companies can get the money. See this, investment bank acts as an intermediary between investors who have excess money and companies who require, corporations who require the money. So that is the job of investment banking. The types of offices in investment banking are front, mid and back. Front office, it deals with the customers. It has basically sales part. It gives the customers the required products, so that business is earned to the bank also. The main divisions in front office are investment banking, sales and trading and research. Mid office looks after the compliance part, so that compliance, it is not detrimental. The sales job is, the front office doesn't do anything detrimental or wrong for the company. And back office looks at the activities like operations and technologies. Okay, all these jobs are taken by the back office. PMS, portfolio management. This is for HNI clients. Okay, all below minimum amount in PMS is 50 lakhs. Process of managing individuals' investments so that they maximize their earnings within the given time horizon, not too much exposed to the market risk. Okay, so there should not be much market risk in this. Much risk should not be involved. So PMS is what? Basically maximize the returns of the clients. Minimum investment is 50 lakhs in PMS. What are the objectives? Capital appreciation. You should increase the money of that client. Maximizing the returns, improve overall efficiency, risk optimization, allocating resources optimally, ensuring flexibility of portfolio, and protecting earnings against the market risk. Okay, so these are the core objectives. You kindly go through this again: capital appreciation, maximizing the returns, overall efficiency increasing, risk optimization, allocating resources optimally, so that here some part is given to banking and finance, some part to FMCG. It's like the shares which we have. You don't put all the eggs in the same basket. So you don't put all the money in only one banking stocks. You put it some in banking, some in FMCG, some in retail, real estate, right? Ensuring the flexibility of the portfolio. The portfolio should be flexible. You should be able to change it anytime. Protecting the earnings against the risks which are not in your hands. Okay.